Hello everybody, welcome back to another video on XAU We are on 2nd of June 2025 and market today has rallied up extremely, and the reason you can find on daily time frame. But for now, I'm going to just focus on 5-minute time frame and with introducing all stops, entries, and possible movements for tomorrow. So stay with me and watch this video to the end. Thank you so much. So in the beginning of the day, which is also the beginning of the week, market opened up with a gap up depending on your broker, and this candle, the first candle, the second and the third, and then market entered into a channel after this spike channel, and the channel here had only two touched, but in lower time frame, which is the 1-minute time frame, market clearly is in 3 touch of the channel 1, 2, and third one overshoots the trend channel line and then enters into the trading range. So spike, then channel with 3 touches, and then breaks below the trend line with 2 legs, the first leg, and then the second leg a little deeper than the first leg. Market touches here this level exactly right here. Okay, and what happens here is that after the channel breaks from downside, market enters into the trading range and also creating a bearish channel, which is also a type of trading range. And after breaking from above, market rallies upside. Now there are a few key points here that I need to mention. First of all, this first and then second leg after channel breaks or an inevitable price action criteria. So after the second leg forms, it comes back up. That's why you can see this series of bullish candles. Market comes back down to touch the bottom of the channel, and this is what I always have mentioned. When we have a channel, the possibility and the odds of touching the bottom of the channel is so high, because that's where market tries to create a double bottom. So this is only a double bottom, the first bottom and then the second bottom rallies up again, it reaches to the trend line and then comes back down. This time it creates another leg down with 2 bottoms, the first bottom then the second bottom, and it rallies down. And look what happens when it breaks from this small trading range. Lots of traders go long, and you could have just entered in this area on this candle, but guys, when it reaches to the top of the trading range, look what happens. And reversed hammer. But the thing here is that no one, and we know that in trading ranges we buy lows and we sell highs, but the thing here is that buyers are so strong and they saw this breakout more important than this trading range. That's why market didn't stop. It means lots of traders didn't see this as an trading range area, and they just accepted that this area is a trading range and it's a breakout here. So market reverses back up. And how did I realize that buyers are strong? Because after this candle formed, sellers couldn't even go a tick lower at this candle. That's why and there were a lot of orders below this specific candle, but they couldn't trigger it, so market rallied upside. And when it rallies upside, this this place here, which is a pullback to the top of this trading range, it becomes significant. So when it breaks it from this top, because this one is a pullback, so when it breaks up from upside, I just go long and put my stop below the low of this pullback. That's why you see this beautiful candles, entry candles have been formed here. So, and also these three candles, 1, 2, 3, just acts as a spike, and after a spike, market always enters into the second phase, which is the channel. So, and channels finish in 3 touches: the first touch, second touch, and third touch. And guys, something about this channel you can see here. Yes, it has started with just only 3 small candles, but it has ended up into a really tight and a strong bullish candle. And the thing here is that not necessarily a small legs in a spikes need to have a leg with measuring from the top to the bottom. They sometimes end up in really big moves, which is the case here. And after the third touch, it breaks from downside. So this one is a 1 leg, 2, which this one is also the first leg, and then another leg, the second leg here. So this one is the first leg, this here, and this one here is the second leg. And after a spike channel, its market enters into another trading range. How beautifully this market moves. And something about this previous trading range that I need to mention is that I always measure from the top of the trading range to the bottom of the trading range. So if I have gone along here, I'm gonna put my profit target exactly at the measure move target, which is here. You see, market comes up and touches the bottom of the top, market breaks above the measure move target and then pulls back down, and then it again goes higher. So if you were in the market, you could even buy this candle. This is a really good entry point. And that said, this is the entry bar, this is the signal bar. You could have gone long again, the first 1, 2, 3 risk to reward ratio. And this one was a trade that I took in the morning, and I put my target exactly like here, right here, because this green bright line is the, I think, the top or the bottom of the previous wick. So yes, it's the top of the previous wick, so it's at resistance level. That's why when you see market reaches to this level, it starts consolidating and also making more and deeper corrections. And something else about this measure move that I need to add here is that you can measure from the top to the bottom. The first target can be here, but sometimes market is way stronger than it really is, it normally is, and it can, when it breaks the first step, it can you can just measure, you can just drag another measure move line to just measure where is the next possible level. If you had gone long, you could put your profit targets here. That's why a lot of buyers have taken their profits. Market comes back down, but it again goes up. So the second measure move, then you have to just follow this step all the way up. So the next profit target would be here, and you see lots of traders have taken their profit targets and they have created with this green line, which is the top of the previous wick, which is a resistance level, sorry. So market then enters into another trading range, because this one is a spike channel with 3 legs, and then enters into a trading range. You can measure from the top of the trading range to the bottom of the trading range, all right, and if you see when market reaches this level, you could just go short, and if you were in the market, you could just take this short in the expectations for the price to come down and touch the bottom of the trading range. But however, today sounds like the bulls are really strong. They push the market even higher, and they create another spike and channel. And after channel line breaks, the first leg, the second leg, and about the second leg here, the thing that is important here is that it is going to touch the middle of this trading range. And also this one here once was a strong resistance. So when market comes down, a lot of people go and buy market and create these beautiful candles. So when it goes up, you only have to measure from the bottom to the top and then drag it up. So you see, if you had gone long here, which is a good idea, so this one, and this is the signal bar and this is the entry bar, you could just buy it above this candle, put your stop loss below this one, enter here 1 to 2 risk to reward ratio. And if you see, a lot of people have gone long here, and when they see another spike, all these candles forming on their highs, so they see it as a spike. That's why they only try to buy, because this is a bullish market. And in a bullish market, you should only follow the trend. And then they start creating this beautiful channel again. 3 touches, 1, 2, 3. Market comes back down with 2 legs. One is the first leg, a correction, and then the second leg. It comes back down to touch the bottom of the channel and just creates another double bottom. Let me just sign it up here. First 1, 2, 3, and these are all buy positions you could have taken. And also it again, market pushes up and touches the top of the channel, you could go short, and even you could go just 1 time frame lower, which in this case is the 1 minute time frame, and you could just sell all the pullbacks at the top of the trading range and buy the pullbacks in the bottom of the trading range. So push the market higher. And before I take this trade, I took another trade right here. I went out, and in the evening when I came back, I saw that market is creating pullbacks. So I thought, we are in a trading range. Okay, so this is my strategy. I only buy pullbacks. So there is no need to just necessarily sit behind your computers and make Einsteinish analysis. You should just follow the steps and just follow the rules. Okay, that's why on this candle, on this candle, on this candle, I went long, and then after 10 minutes, just look what happened. It means lots of professional traders have bought this pullback. That's why they have created such rallies. So if you are in a trading range, then trading range moves up. So there is a point here, guys. You might ask, and I also put my profit target right here at the top, but I didn't sell the top of the trading range, and there is a reason that I'm going to tell you right now. I saw some interesting behavior right today. If you see this move, this is a trading range, and then market comes and breaks it from the top, exactly like here. And I thought, and again, this even happened here. It broke, created a channel. It broke, created a channel. It went up, created a channel. and after channel trading range. Again, this trading range was absolutely different from the normal trading ranges that you normally see, but your eyes has to get used to it with experience. Right? So when I saw this candle up, I realized this is a breakout, and because 85% of breakouts usually fail, you should wait for the next candle to form, which here in this case, this candle is the next candle. So this is a confirmation that this breakout now is valid. So you could have just even buy this one. Buying this one is much better one than necessarily buying this candle. And the reason is that this has confirmed that I'm a real breakout. I'm so strong. So you can now go long. That's why when it reached to this level and after it hit my profit targets, I re-entered into the market and I bought at the market. Now, let me tell you, why did I buy here? I saw market came back up, big candles, a small dojis, big candle, another small doji, big bullish candle, another small dojis forming in the direction of the breakout. And that's a sign of a strength to me, right? So when I see market is strong, and I only try to trade in the direction of the market, and even market has come back down. If you see the short videos, you can see when I posted one of the videos, market was here. I was absolutely in the I was in profit, but market came back down, but it couldn't hit my stop. You know why? The reason is that I know how to put my stop loss and where to put my stop loss, because I don't want to easily get hunted. Not just get hunted, sometimes some traders just sell and take their profit. That's why market comes down, and a lot of more buyers, actually smart buyers, know that this trend is strong, so they re-enter again here. That's why they create more bull candles. And if you see, this is my first profit target place, and this one is the second, and we are at the end of nearly end of the New York session. Oh, New York session has ended, but I'm still in the trade because I only trust in price action. So, and the place that I have to put my stop loss is below this low. Market even couldn't reach this level. That's why you should in bullish market, you should only buy the market and put your stop loss below the last low. When I bought this candle, my stop was here, because this doji bar is a pullback, but buyers buy it, break above it, market comes back, touch the top of this doji, and then they again go up. And when market break above this high with this candle, I just shifted my stop losses from here to this low. Market goes up, comes back down, can't reach out to my stop loss, and we are safe. And if market again breaks above this, I hope market to take my profit and closes my position. Let's see what happens. Alright guys, thanks for watching this video. This is a repetitive patterns that every day forms, and if you read the price action correctly, you're gonna be a very professional trader. I'm gonna soon, very soon, start recording some a course, a price action course. I know it is frustrating for you to sometimes just necessarily watch different traders, different strategy, specifically bullish, specifically bullshit indicators. So I think you only need to watch this course, and you are going to be a professional trader. Thanks for watching. Don't forget to hit the subscribe button and like the video, and I'm gonna release videos every day on market outlook, and you can just get updated yourself. Thanks for watching and have a good night.